Hey, and welcome back. This is John Mazzara. Today, I'd like to talk a little bit about COVID-19 and how it might be affecting the real estate market via the mortgage market. So, out there, this is as of 4/5 of 20. So, again, it could be different tomorrow because things are always changing in the mortgage world. And, you're going to want to talk to your specific lender uh, and to learn about their products, their programs, and their underwriting guidelines. But what I'm seeing out there in the marketplace with my buyers and how it might be affecting my sellers is that a lot of the liquidity has changed. And what I mean by that is underwriting guidelines have tightened a little bit due to credit, and they're also doing things like removing products altogether. So some lenders, and again, you have to check with your specific lender, will close on a warehouse line and own a loan, and then they have to sell it in the secondary market. So if they can't sell in the secondary market or they can't hedge properly, then they aren't going to underwrite loans. And that may affect their lock period. Some lenders aren't allowing locks over 30 days, and some of them have just eliminated underwriting certain loans altogether. Now, that could be a big problem if a buyer is planning on using that financing for their purchase, and now they can't. So they either have to save more money for a down payment to switch to a different program, or they have to wait until the lenders have liquidity again. This isn't going to be a permanent thing, but this is occurring as we speak, and it's fluid. So every single day is different. So that's why I say you need to check with your lender of choice. Now, what I've seen in our marketplace is that this is affecting some of the smaller lenders more than it's affecting maybe the larger, well-known lenders that you may know that originate with their own money. The secondary market is where everybody sells to Fannie, Freddie, and other mortgage-backed securities, but the smaller lenders don't have necessarily access to their own money. They have warehouse lines, and what they do is they fund loans, they warehouse them, they keep them, and then they package, bundle, and sell them. And if there aren't buyers for the loans out there that they want to sell, then they won't originate them because they're not in the business of maintaining loans necessarily for 30 years. They want to originate them, fund them, hold them, package them, and sell them, and then do it all over again. So we're seeing some of the loan programs that were offered just weeks ago are now being shut off. And so a buyer that had planned on using, let's call it a Minnesota Housing Finance Bond funding, which is funding today. There's no problem with them whatsoever. But the lender that a buyer that I'm aware of was planning on using them, and the lender who was going to place it with that company stopped underwriting and originating those loans temporarily because of liquidity that they're having. So it depends on where you go. If you hear that you can't get your mortgage product from source A, you may want to check with source B. What I'm seeing in the marketplace is that the larger, well-known names, I won't name names, but I think you know who they might be out there, they tend to have a little bit more liquidity because they're much more of a direct conduit to Fannie Freddie, as well as using their own funds in many cases and not being afraid to warehouse and package and hold a loan for a while. But that's what's going on. So it will affect, and it could affect some of your transactions, which is why they came up with that form that I mentioned in the last video, the amendment, with regarding coronavirus, which might allow an extension until funding can happen. It might allow a cancellation. So anyway, things are fluid, things are moving, but we have lots of resources. As agents, we're not tied to any specific lender, so we can help, share information where financing might be obtainable, and give you what we know at any given time. And again, it changes every single day. But rates are great. Rates are extremely low. I can't tell you what they are because again, they change every day, but you'll be very pleasantly surprised if you go take a look at what mortgage interest rates are at. And it might be a wonderful time to save some money by considering a refinance. So if you decide not to move and you just want to stay in place, then I would encourage you to do an analysis on whether or not refinancing might make sense. You might want to consolidate debt where that's available. Now, again, that's changing daily too, where they don't allow you to do cash out refinances. Not going to be at all lenders, not going to be on all programs, but it is on some. So there are options, there are choices, and there are people that can help you navigate. If you need any information from me regarding that, I'm happy to provide some names and provide some direction and what I see in the marketplace. So wherever I can help, John Mazzara, 612-386-7027. Again, I'm happy to do a direct Zoom video with you. So if you want to communicate via Zoom with me or over the phone, I don't care, however you want to do it. wherever I can help, leave a comment down below and I'd be happy to answer your question there as well. Have a wonderful day.